Well, hello everybody, I'm LA Little, and this is your daily NeoTA wrap. Take a look at these markets. We do it from a neoclassical perspective each time, asking ourselves just one question: what happened today? What does it tell us about the coming ones? Do the show 4 times a week, every Monday through Thursday, broadcast at or before 10 o'clock Eastern Time, archived on YouTube, available there under the channel, LA Little. As far as what did happen, last night we were talking about the potential for a bounce, and that is kind of what we got today, and it was a tough one, right? Bounced up, bounced down, bounced back up, close up a little bit higher. Dow was the weakest one. You got a pretty good push up here on the listed issues, 1/4%, but the real juice was in the Nasdaq and the Russell. So push up, yes, did get the bounce. Was it a big bounce? No. Compared to what we came down on, no, it wasn't. Will it bounce more? That's the question, and we'll be trying to answer that tonight. Gold couldn't get anything going, down 0.5%. Bonds also down almost a full point, 0.69%. Oil bounced up about 2%, and the dollar was higher almost by 3/4 of a point. If we take a look at the charts to see what's happening there, what we're going to see is the bounce, right? And it's a weak bounce, but it is a bounce. Now, the bad part of this bounce is that it went under and back over. So if we look at these lows here, you go under, you go over, you have more volume. That says you can come right back down here and test it again. The other piece of bad news is that you came in to start doing the immediate retest regen. Now, that's good in the sense that you did it. It's bad in the sense that you couldn't stay in it. So again, mixed signals here on the S&P 500. If we look at the Dow pretty much set up the same way, gets under, back over, has a little bit more volume, also trades into a swing point low and back underneath it. So same story there as we saw in the S&P 500. Elsewhere, it's inside days. Inside days almost never tell you anything, and in this case they don't. You're inside the prior day's bar, so what? Doesn't tell me much of anything. NDX, also inside day, and if we go to the Russell, also an inside day. So all of them, same thing, all of them inside, and all of them showing more volume. So, if you like the fact that they had more volume, you like it because you actually didn't trade down and test those lows. Let's look overseas and see if we have some signals over there. And we'll just go down the boards here because we haven't looked at these in a while. All ordinaries, trades under, back over, has more volume. That is going to come and test again, although it can do a test of that swing point low. That would be a bearish retest regen there. If we look at the Sensex, now the Sensex had a nice push up, pulls back on the world weakness, and now it's pushing back up fairly fast. So this one's actually going to try to attack those highs. If you want to be long this market, you really would have liked to see it take one more spill, but it didn't do that. Instead, it gets back over, holds up there, and now is acting as if it wants to go higher. If we look at Brazil's still trapped in this range down here, still nothing really happening there. Let's move over to Europe and start with France. So now France yesterday actually behaved pretty well. Today, unfortunately, worse. Goes down, moves into the low bar's high, stays into it. More volume. That suggests this thing's going to try to test lower. The DAX, pretty much the same situation. Trades under yesterday's low, stays under it, into the big bars, not the big bars, but the low bar's high, and stays in it again tonight, just like France did. That also potentially can go lower, and actually suggest that it will. The FTSE trades off. So the FTSE, coming off pretty hard. And if you look at the FTSE on the weekly, it's getting some pretty good damage now at this point. Going back to, or actually coming over to the U.S., Toronto, our friends up north, trade under the big bar's volume, the high volume bar, stays under it today. Inside day, doesn't really tell you much other than it's weak. The H shares over in Hong Kong almost did a full takeaway bar. So that's actually kind of a positive. Lighter volume, didn't get over it, so that's actually good. If we look at the Korean market, I don't know what to say there. That's actually looks kind of like the Sensex comes down, back up. That one looks like it wants to try to go higher. I missed Hong Kong. Let me go back and get Hong Kong. Hong Kong inside day, decent bounce, but an inside day. That one, lighter volume. Yeah, that actually looks like it can bounce from here because you traded into this low, 25,640, 25,617, right? So you traded underneath the low, less volume. You close above it. This actually does look like it's going to trade back into these two bars. That's the the April 9th and 10th. So that actually looks kind of positive. Japan came off big points last night and night before last, and last night just stays in it. So nothing there. It was up, but not that much. Inside bar really doesn't tell me much. Now Shanghai, this one's a different story. If we look at Shanghai, you press down, you had volume going under these swing point lows, right? Reconfirmed bearish on another break the night before last. Last night gets under it, has more volume, but reverses and almost does a full takeaway. That's again a mixed signal in that it's positive short term is negative longer term. And so this thing's probably going to try to trade higher back into the swing point low here, it looks like. And then that's where we'll tell, let me just draw it in here. That's where we'll tell what's going to happen, right? Because the retest region is here. Today, or actually last night, the fact that it traded back into this bar, this is, getting over the top of this bar does what? Well, that's the bearish retest region. Right now, it's saying it's bearish, right? And it's testing back into this bar's high, or it's going to try to. If it gets over it, stays over it for a bar or two, and especially if it gets into this bar, then that says range trade, right? We finally found the bottom down here at the range, and now we've got some sort of range trade. The great thing about this is this range is huge. It's 23%. If you can't make money inside of a 23% range, you're hurting. So that is the trade there, and it does look like it's going to try to trade higher tomorrow. Let's see what else we got. Indonesia bounces off the bottom. That actually looks like it can trade higher. And Taipei also looks like it can trade higher. So, overall, mixed signals. Asia looks like it's going to try to trade higher for the most part. And Europe looks like it's going to try to trade lower. Now, we did get the default on the Greek debt today. I believe that's already built in. I don't think that's a surprise. The issue now becomes what happens on the vote that comes up on Sunday. Now, there was kind of this little ambivalent, we're going to meet in the morning on the latest Greek proposal that came in, right before the strike of midnight. And we'll see how that one plays out in the morning. If there's any hint of that actually doing something, right, some sort of a reconciliation, the European markets are going to trade higher. I believe that happens kind of first thing in the morning, European time, so that will be reflected in the markets by the time the U.S. starts to trade. If we come to the domestic, back to the domestic side, I want to pop into the major sectors. I looked at all the major and the subsectors tonight to look at them, and the only two positives I could find had to do with the XLI, goes under, back over, a little bit less volume that can bounce, and the technology. Technology does the same thing, under, back, over, also can bounce. Everything else inside days or just really didn't tell us anything, with the exception of biotech, which almost did a takeaway bar, which leads me to talk about what I wanted to talk about tonight, and that is that if we go to the Ox market and we pull up the Ox market, the first thing I want to do is I want to pop into the dollar, and the dollar actually gained against the euro today and closed at the high of this range. This is going to try to pop over this tomorrow and start trading higher. That's going to be bad for domestic equities, probably good for European equities, considering those two markets with respect to dollar strength, euro weakness. But the thing I really wanted to point out on the Ox screen was, yesterday we had, high yielding bonds, in other words, junk bonds selling off sharply. Well, today they bounce. And if I look at them, they're coming back in to do their bearish retest regens now. And so that test is going to come up. It's going to come up right now. We'll see how it behaves. This should fail and try to trade lower. Right? In other words, you should get the bounce and then try to trade lower like that and create the ABCD structure. If I look at junk bonds, right? Junk bonds, same thing. Now, let's go over to the more secure bonds, like the Treasury bonds. What does it do? Trades up to yesterday's high, which was 118.67, prints 118.70, gets over it, back under it, less volume, sells off. So it goes the other way. So last night we couldn't keep junk. Tonight we don't want the good stuff. That's true here. It's also true in the high quality corporate bonds. If we look at LQD, for example, this one also over, back under, less volume. Wants to trade down again. So if there's a theme here, the theme in my mind is that the risk, aversion that we saw yesterday more or less dissipated today. You saw biotechs rise, you saw securities techs rise. Those are hot money stocks. All of this to me means that the measure of fear decreased today. It was a one-day event of all things, right? How many times have we said that in 4 years? There's still no fear out there. Now, the structure, as I talked about last night, is in place to actually put some fear into this market if it starts to break down. And that breakdown is going to be telegraphed to us at the end of this week. And what I'm talking about, if I go to the weekly bar here, is this bar. That bar is 2067.93. We're still trading under it, 2063.11. If we stay under this on the close Thursday, because we got a holiday shortened week, that's going to be a break on multiple swing points. That's not a good thing. That typically says you're going to get 2 to 3 bars extension in the direction of the break. Now, in the direction of the break, of course, means that we're going to continue down. That would bring these into focus, and believe me, if these come into focus and we start breaking them, there will be some fear. So we'll see if fear develops or not, but certainly as of today, fear more or less dissipated. Now, the real fear, of course, is going to be what happens in Greece come Sunday. And do they vote down austerity or do they vote it back in? And that's where, Monday we're going to have another unknown. And so you're going to go into the weekend with another unknown, not knowing how it's going to play out. That's going to make it hard for these markets to lift and hold up. The way that they're going to hold up, if they're going to, is going to be for the ECB to target any kind of bond market problems and go after those bonds and create demand for them and drive the yields back down. So let's say that we're having issues in Portugal and we're having it in Italy and we're having it, in some of the peripheral countries. ECB needs to get right in there, start buying them up and drive the yields back down. To me, that's where the risk is. It's in the bond markets of the European nations as a result of the contagion potential off of Greece and the unknowns associated with it. So it's really in the ECB's hand. The ECB now pretty much has a free hand to go in there and buy that debt and to squash any kind of concerns that may arise. I suspect that's what they're going to do. We'll have to see if in fact they do it and if they're successful in doing so. So watch the bond yields in the peripheral countries. That will be a key tell the rest of this week and next week as well. Folks, that's it for tonight. What I think is going to happen tomorrow? Well, you've got mixed signals again. Given the declines that we've seen already, given where we're at, I wouldn't be surprised, just like I told you last night, to see one more day of an attempted bounce. Maybe that bounce will actually get some juice tomorrow and hold. Maybe it's another one and done like today and it actually starts back down. I think the bulls have another chance here tomorrow to try to push this higher. And of course, it's going to depend heavily on the news flow out of Europe. I will see you next time. Until then, have a great one. Thanks for joining me. Take care and good night.